On today's episode, we are going to take a look at 3 Chinese stocks that have taken quite a hit, but can help diversify our portfolio. Like always, we're going to take a quick look at fundamentals, technicals, and even valuation metrics. So let's get started. All right, so the first company we are going to take a look at is NIO. This is the electric scooter company. Most of their products right now being sold are in China, but they are expanding into the international market. Here on their website, we can take a look at all the products that they have. From my most recent video on this stock, these 2 products are new. So you can see they are continuing to release new products to customers. So NIO right now is traded under the NASDAQ as ticker NIU. It's currently sitting at $33.14, and it ended the day 2.4% down. If we take a look from its 52-week high, the stock has definitely seen quite a correction. It's down about 32.96%, and it currently has a market cap of $2.53 billion. So we can see this is a super small company, and the stocks we're gonna take a look at later on are all hitting different markets as well. If we take a look at future growth, this company is expected to grow 28.6% on average for the next 3 to 5 years. So this is a nice hyper growth stock. Before we take a quick look at the rest of the fundamentals, if I am providing some form of value, make sure to hit the thumbs up and the subscribe button. It helps so much with the overall channel. And let's take a quick listen to today's sponsor. A big reason why I'm able to provide so much content to you guys right now. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services, the Fool offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So taking a look, NIO is profitable in earnings, and they are also positive in cash flow from operations. If we take a look at their cash and short-term investments, they have about $1 billion in cash and short-term investment and about $180 million in debt. So they have a lot more cash. So fundamentally, NIO is in a great place. We saw strong growth. We saw a company that it was profitable. We see a very strong balance sheet. If we take a look at the most recent earnings, which were first quarter of 2021, reported on May 17th, the company saw 135% revenue growth compared to same time last year. But we have to remember COVID same time last year was really affecting the Chinese ecosystem. So that's a huge reason why the numbers look pretty insane in growth. If we take a look at some other highlights for the first quarter of 2021, they sold about 150,000 scooters in one quarter. That is an insane number. Most of those numbers are coming from China. There are about 5,000 units come from the international market, mainly from Europe. So in one quarter, they sold about 5,000 international. Another thing they are seeing is the amount of franchises stored in China has increased by over 300 since December 31st of 2020. So that was just a quarter before this quarter announcement. They did mention that the international sales are down, mainly due to, again, COVID reasons. But just in the first month of April, they delivered approximately 3,800 units. Remember, in the full quarter, they sold almost 5,000. So in 1 month of quarter 2, they have already delivered more than half of the units they sold in the full quarter 1 of 2021. Like I mentioned earlier on, NIO is launching new products. On April 6th, they received about 41,000 pre-orders for the month of April on some of their newer units. So this is definitely a product that's being liked by customers. The final thing I wanted to mention is NIO expects about a 40 to 60% revenue growth for the second quarter, and this is about 900 million to about 1 billion in their local currency compared to 543 million this quarter 1 of 2021. So they're expecting strong growth year over year, but also strong growth quarter over quarter. The second stock we're going to take a look at is an e-commerce giant, but I feel people only see this as an e-commerce giant. We're going to take a look at JD.com. This is mainly known for their e-commerce, but they are also a huge logistics company. JD built the world's first fully automated warehouse in Shanghai and are currently developing their own drone delivery and automatic delivery robots. robots. They are also innovating in new technologies like virtual reality, augmented reality, drone deliveries. Here, if you take a look at their websites, you can see in the smart logistics, they became the first company in the world to launch regular commercial drone operations. They became the first company to globally launch a fully automated warehouse. They are also launching the world's first smart delivery station powered by autonomous delivery robots. JD is also very focused in the augmented reality and virtual reality. They have created technologies that help customers interact with the items they are offering. For example, here's an article where JD kind of partners up with a cosmetic company where you can use their augmented reality technology to kind of test the cosmetic products, the makeup products on your face to see how they look like before purchasing the product. So overall, huge innovative company. Right now, JD.com is currently traded under the Nasdaq as ticker JD. It's currently sitting at $71.85. It is down 1.09% right now. If we take a look from its 52-week high, the stock is down about 32.78%, and it currently has a market cap of $112 billion. JD.com is expected to grow 16.5% on average for the next 2 to 5 years. So it's a nice growth stock. This one is also profitable in earnings and positive in cash flow from operations if we take a look at trailing 12 months. And now if we take a look at their balance sheet, they have about 135 billion in cash and short-term investments and about 17 billion in debt. Again, this is on their local currency, but what can we see? Strong balance sheet, and this is going to help them continue to innovate and have kind of growth initiatives. They also are expected to see huge growth, and they have strong fundamentals in positive earnings and positive in cash flow from operations. If we take a look at their most recent earnings, they reported 39% increase in revenue compared to same time last year. So huge growth. They also saw annual active customers account grew 29% compared to same time last year. We can see JD not only is in the logistics, but they are also in JD Health. They're working on telemedicine. Like I mentioned it before, they are very innovative in the market they're in. JD has recently partnered up with Tencent to launch JD Tencent Cloud Warehouse, and this partnership is to serve new business models including social and live streaming and e-commerce operations. All right, so the final company we are going to take a look at is Tencent. So Tencent owns a huge variety of companies within the online ecosystem, from mobile gaming, PC gaming, social advertisement, live streaming, online audio, online education, and so much more. One of my favorite reasons for Tencent is their overall game diversification. They own a good portion of studios. For example, Riot Games, the creator of League of Legends. They own Supercell, the creators of Brawl Stars, one of the top 10 mobile games globally. They also have investments in some big players. Here you can take a quick look at them: Activision, Roblox, Ubisoft, to name some of them. And they have partnerships with some other big players as well. Tencent is a good way for some studios to kind of enter the Chinese marketplace. So they do release games like Call of Duty Mobile on their platform, which I think is a great move. Here you can see their online advertisement. They have a lot of social, they have a lot of media, they also have tools and other. They are also in this fintech and business servers with payment solutions, online fintech services, even the cloud service. So we can see this is a digital content mastermind. All right, so Tencent is currently traded over the counter as ticker TCEHY. There might be some brokers that don't allow you to trade Tencent, but it's currently traded at $78.40. For the day, it ended up almost 1.4% up. Tencent right now has a market cap of $739 billion. This is a huge company for sure. If we take a look at future growth, they are expected to grow 15.5% on average. If we take a look at fundamentals, this company is profitable in earnings. They're also super positive in cash flow from operations. So fundamentally, they're looking at a great place and a great growth value as well. Now, if we take a look at their balance sheet, they have about 226 billion in cash and short-term investments and about 253 billion in debt. Even though they seem a bit leveraged, this is a more mature company with profitable earnings, with positive cash flow from operations. So even though they are leveraged, it's not something I really care about, just because they're able to fund this form of leverage and they own so many different companies. If we take a look at their most recent earnings, total revenue grew 25% compared to the same time last year. Their game revenue grew 17%, social networks grew 15%, their online advertisement grew 23%. We can see most of this company's revenue does come from value-added services, and that's pretty much social networks and the gaming department. The second biggest is the fintech and business service revenue. So next, let's take a quick look at technicals and looking at the time frame I like to look at to make sure stocks aren't overextended. First, Niu, I'm seeing it's definitely not overextended, sitting next to its moving averages. JD, pretty much the same, right? It's actually a bit underextended compared to its moving averages. So definitely sitting at attractive prices. And then Tencent looks pretty similar to Niu, sitting around its moving averages. So I do believe these companies have eliminated a good portion of the risk because they're not overextended, but that doesn't mean the stock price can't continue to go down. That's always a possibility. Next, I want to take a quick look at valuation metrics, but unfortunately, because Tencent is an over-the-counter, I couldn't get too much information. So here we're just going to take a look at JD and Niu. All right, so let's start off with JD right now. The price to sales ratio is about 0.61. And we can see from its near historical values that is a lot lower, but these are values last seen in June, July of 2020. So again, a good portion of risk has been eliminated, but compared to pre-COVID, it's still a bit higher. So investors should remember that. The same thing can be said about Niu. It's definitely down from its near-term, short-term values, but it's sitting at values last seen in June, July, September of 2020. And it's still a lot higher compared to pre-COVID. All right, so now my overall thoughts. All three are in my portfolio, and all three are easily tier 2 stocks in my portfolio. At the moment, I don't see any of them being a tier 1. I think Niu is my favorite choice if I'm looking for a heavy growth. JD is probably my favorite if I want to get exposure into that e-commerce market and that innovative market. And Tencent is probably my favorite if I want to get exposure into like the gaming market in a company that's very mature already and shown some great fundamentals, but is still seeing some strong growth. So let me know what you guys think. Take care, have a good night, and see you next time.